for our module 4.A. So this is entitled Budgeting for Planning and Control. So before we start, let us have a short overview about the contents of this module. Careful planning, whether formal or informal, is vital to the health of any organization. Business managers must know their resource capabilities and have a plan that shows those resources will be used. Therefore, in this module, the basics of budgeting will be discussed and the traditional master budgets are developed. For our learning outcomes, so at the end of this module, the students will be able to, number one, define budgeting and discuss its role in planning, control, and decision making. Second is to prepare the operating budget, identify its major components, and explain the interrelationships of the various components. For the indicative content, so we will have first the role of budgeting and planning and control, and the second is preparing the operating budgets. Okay, so to start with, let us have the role of budgeting in planning and control. So basically, budgets are quantitative plans. This is made for the future. This is also stated either in physical or financial terms, or it can be both. When used for planning, the budget is a method for translating the goals and strategies of an organization into operational terms. Budgets are also used in control. So basically, the idea of budgeting is that the organization should prepare for the future. Okay, although in this case, this preparation or plan is in terms of quantitative form, but it can also be the strategies, or it may be in physical terms, but most of the time it is based on financial planning for the future. So this is of course to identify their target revenues, their target costs, and their targeted profits. Okay, so in this case, if that is what they will do, then they are able to prepare for whatever the uh, organization's needs in terms of resources, funding, capital, and the like. So this is the use or the purpose of budgets in an organization. So control, on the other hand, is the process of setting standards, receiving feedback on the actual performance, and even taking corrective action, okay, to mitigate and to correct any deviations whenever actual performance deviates significantly from that of the planned performance. So this is basically the essence of control, and budgets later on will help the management in this purpose or function, because in this case the budget will be or will serve as their planned performance, and this will be the benchmark later on for the actual performance that have transpired in the day-to-day operations, okay, and the performance of the organization. So this is how budgets will help the organization in terms also of control and not just for planning. Okay, so in here we have the master budget, okay, that is or that shows the relationship also of the different functions of management. So here we have planning. So in planning, basically the organization will prepare a strategic plan. So strategic planning normally is for a long-term planning. So it may range from 5 to 10 years or more. So here, this is the organization's objectives in the long run. So basically if you are in the management or top management, so this is one of the priorities that they usually prepare, especially if the organization is starting. Okay, so this is what they want to achieve. Okay, and why did they start the organization in the first place? So this is their guide and like a map on where they want to go in the long run or in the long term. So this is what we call the strategic plan. Okay, so here they will establish the long-term objectives. Okay, and these long-term objectives and planning will be broken down into several subunits, okay, or periods. And this is what we call operational planning. And of course, there the short-term objectives will be formulated. Of course, the long-term planning will be achieved by the step-by-step uh, plan as well, and the actual performance every period, normally every year. So this is reflected in our operating budget. So that is for our short-term objectives. Okay, and of course, along with that are the budgets. So budgets also will serve as our financial planning. So this may also be long-term or short-term. Okay. So of course, after the planning stage, so this is now where we implement what we have reflected or formulated in the plans. So the operations, this is the actual performance of what we have planned to do based on the strategic or operational planning. So here, this may be in the form of production already, actual production, performance of services, sales, and so on. Okay, and then as the time passes by, here, for control purposes, okay, of course, we will compare the actual results from the operations with that of the planned performance. So here, we will, or the management is going to determine if there are variations, okay, or deviations between what is the actual result and what is actually planned or budgeted. Okay, and then any deviation will be, or depending on the result, will be taken action so that any negative impact or problems that may have arise during the conduct of the actual performance will be mitigated or avoided in the future. Okay, so here they will also uh, return into for the formulation of strategies stage, because planning is actually a continuous activity. So we do not just plan one time. If the need arises, then the organization might change what they have planned in the past so that they will be able to perform better for the organization in the present and for the future. And of course, here, aside from the control function, there will also be some feedbacks. Of course, this is a sort of evaluation of what was actually happening in the actual field, and what should be done based on the long-term objectives. Okay, so this is uh, the master budget and the relationship, okay, for an organization. So the purpose of budgeting, aside from what we have mentioned in earlier, so budgets are usually prepared for areas within an organization. So we can prepare budgets for the different departments, each department, plants, divisions, segments, and so on, or even the organization as a whole. However, for the organization to make it uh, like an interrelated or comprehensive budget, so they have to gather the necessary or the needed budget from different departments or parts of the organization, and then collate it and combine, and then make it as a budget for the whole organization as one. Okay, so that's how normally budgets are made. So here, aside from the different departments or parts of the organization, we can also prepare budgets for the different activities. Okay, so we can prepare budgets for sales, production, research, and other activities. Okay, all of the activities actually, because here we are or the management also wanted to know, especially the costs incurred for the different parts or the different activities of the organization, so that they will be able to minimize those costs for the benefit of the organization. Okay, so the system of budgets also serve as the comprehensive financial plan for the organization as a whole, because again earlier, as mentioned in the first slide, if you could still remember, in the introduction of the budget, so here we have mentioned that budgeting is actually a financial plan. Okay, so that's why they serve as a comprehensive financial planning for the organization. So, what are the purposes of budgeting? So, here, number one, it will force managers to plan. Okay, of course, as mentioned earlier, the budgets should be made for each department. So, meaning to say, each manager who are responsible or authorized to supervise as a specific department should make their own budgets for their own department. So that is why it will force them to make plans. Okay, however, in this case, this is in the form of a financial planning. Okay, second, it will also provide resources or resource information that can be used to improve decision making. So again, basically, if the budget will be made for each department and for each activities, therefore, those persons who are directly involved in the activity or in the department will know what are the actual needed budget in terms of costs, in terms of expenses. So here, the management or the organization as a whole will accumulate a lot of information. Okay, and then of course, this information or financial information will be used for decision making. Okay, the third is budgeting will also aid in the use of resources in the employees by setting a benchmark that can be used for the subsequent evaluation of the performance. So again, since we have or the organization has limited resources, so here the different departments and activities also needs budgets so that they will be able to perform their duties. So the budgeting or the financial plan will actually help the management or the organization to determine where or what part of the department or the organization or the activities should the resources be placed more, or what activities or department should the resources be limited, okay, because of the information that is being provided. And of course, in that information, the management will also determine if the activities or the department's expenses and costs, the budgeted expenses and costs, are necessary and relevant. Okay. So this, aside from that, the budgets also will serve as a benchmark that will be used for future evaluation. So this is where the control function of the management will come in. Okay, and the last is, or the next I mean is, it improves communication and coordination, because here the information or the budget will be coming from the subordinates or from the independent or different departments and activities. So therefore, communication from the lower to the top management be uh, will be activated, and coordination will also play its role, especially in the decision making. process. Okay, so that's the different purposes of budgeting. So if you could notice, it's very important for an organization to actually have their budgets. Okay, so what about the budgeting process? So here, the budgeting process can range from the fairly informal process undergone by small firm to an elaborately detailed several month procedure employed by large firms. Actually, if you are just a small firm, then budgeting can be made for the organization as a whole without preparing for each department. So here, the head or of the management may set a meeting so that they will discuss uh, with the different key personnel of the organization about the important details that they should include in the budget. Okay, so that's how budgeting is made, especially for a small firm. However, if you are talking about the large firms, so this is a more complex setting or type of organization. So therefore, a more formal and detailed procedure should be followed. Okay, so the key features of the process include, of course, directing and controlling of the overall budget. This is, again, of course, to implement what has been planned. Okay, and to aside from implementing, of course, you have the feedbacking and the control uh, function of the management. Okay, so in terms of directing and controlling, so some of, especially for the large companies or organization, they have this different officers that is in charge of the directing and coordinating of, or in terms of budgeting. So in some organization, they have the budget director. So here, the budget director normally is the one who works under the direction of the budget committee. And he or she is usually the controller or someone who reports to the controller. So meaning to say the budget director could be the controller or the chief financial officer or someone who reports to the chief financial officer. Okay, because here normally the budget director will have the most responsibility, okay, among the officers or the personnel in the in an organization in terms of budgeting. Okay, so aside from the budget director, we also have the budget committee. So this budget committee is responsible for reviewing the budget, providing policy guidelines and budgetary goals. They also resolve differences that will arise as the budget is prepared. They also provide the final budget and monitoring the actual performance of the organization as the year unfolds. So the budget committee also assures or ensures that the budget is linked to the strategic plan of the organization. So normally, the budget committee is composed of the top ranking management or key personnel in the organization. So, in some organizations, the budget committee actually is composed of the board of directors, depending on their composition or on the decision of the organization on who will be a part of their budget committee. But again, this committee will have the supervising function in terms of budgeting for the organization as a whole. Okay, so, and of course, the president of the organization. So here, he or she appoints the members of the committee, okay, who are usually the president, vice presidents, and the controller. So these are normally are the key personnels who are part of the budget committee. So aside from that, they can also, in terms of or if their organization is a corporation, so they can also include the board of directors if they would like to. So we have the different types of budgets. So the first is we have the master budget. So here, when we say master budget, this is a comprehensive financial plan for the year made up of various individual department and activity budgets. So a master budget can be divided into operating and financial budgets. So as we go along, you will learn what are the master budget, operating, and financial budgets, and we also have the illustrations on how to prepare them. Okay, the next, aside from that, master budget is also prepared for a 1 year period corresponding to the company's fiscal year, okay, or whichever the company is following in terms of financial period. So normally it's for a 1 year period. Okay, the next type of budget is the operating budget. Actually, this is the subs section or the form also of or other types or subtype of the master budget. So here, operating budgets is concerned with the income generating activities for a firm. So normally, when we say operating budgets, we deal with budgeting in terms of sales, production, and finished goods inventory. Okay, so income generating activities. So the ultimate outcome of the operating budget is a pro forma or budgeted income statement. Okay, because from the activities that we have mentioned, basically we can see these activities in the income statement. Okay, and we measure the income generating activities. So here, in effect, the pro forma income statement is done according to form, but with estimated, not based on historical data. Please take note that we are doing a budget, meaning to say we are doing planning. So planning, meaning to say there is no performance yet of any activities. So therefore, we have no historical data. So this is based on estimated values. Okay. Please do not be confused of the difference between the income statement that you know where we prepare that based on historical data or what are the transactions that's happened in the past. That is not budgeting. Okay, when we say budgeting, again, this is planning for the future and there is no performance of any activities yet. That's why it is based on estimated amounts. So the next is the financial budget. Okay, so here, financial budget is concerned with the inflows and outflows of cash and with our financial position. Okay, so basically here, we will be dealing more with budgeted cash flows as well as budgeted statement of financial position or balance sheet. Okay, so the financial budget also plan is done for the planning of cash inflows as mentioned and outflows. So these are detailed and this is actually in the form of a cash budget. So we also prepare the expected financial position at the end of the budget period. And this is shown in the budgeted or pro forma balance sheet. And again, please take note, this is not based on any historical data, just like your operating budget, where we prepare also the estimated or projected income statement. Okay. So another is the continuous or rolling budget. So here, this is a moving 12-month budget. So as 1 month ends, an additional month in the future is added so that the company will always have a 12-month plan on hand. So here, we do the budget for every month. Okay, that is the continuous or rolling budget. So aside from that, however, the proponents of continuous budgeting maintain that it forces managers to plan ahead constantly. Okay, of course they have to, because every month they have to prepare the budget. So another type of budget is the continuously updated budget. So here, when we say continuously updated budget, this is similar to that of the continuous budget. So the objective of this budgeting is not to have a 12-month budgeted information at all times. Okay, so what does continuously updated budget do? Instead, this is done to update the master budget each month. So as the new information becomes available and is updated throughout the year. Okay, so normally, based on their definition, we can say that they are the same as that of the continuous or rolling budget. However, in this case, we just update the master budget based on the available data that is being presented. Okay. So what about, okay, after we've learned about the budgets, the different types of budgets, its purpose, and so on. So how do we gather the information for budgeting? So here, normally, we will begin with the master budget process. Okay, master budget means this is the budget made for the whole year. Okay, so here, the director will alert all the segments or departments of the company to begin gathering the budget information, or they will prepare their budgets for the month or for the whole year. And then they will collate it. So the data that will used to create the budget come from many sources. Okay, so it can be based on the historical data. But here, the historical data that we are talking about is not the actual transaction that has occurred in the future, but this may be in the form of the trend, the percentage change in the past, what happened in the past. Okay, or we will base what was the result in the past. Okay, so that is what we mean by historical data. However, this data alone cannot tell the company to what to expect in the future. Okay, so that's why there should be other means of source of information. So aside from that, of course, we or the management also gather information from the forecasted sales. So the sales forecast is the basis for the sales budget, which in turn will be the basis for all of the other operating budgets and most of the financial budgets. So here you will learn that the budgeting normally begins with the sales budget. Okay, so this is where the activities of the organization is being reflected. Okay, so there you can see the revenues, the costs, okay, and the different activities, as well as the production, okay, that has or that will be planned, okay, to be done in the future. So that's why this will be our starting point in making the budget. So according to the accuracy of the sales forecast, strongly affects the soundness also of the entire master budget. So since the sales budget is considered to be our starting point, therefore, the data should be relevant and it should forecast strongly, okay, with relevant basis, because this will be the foundation of our master budget. This is the starting point. Okay, so meaning to say, if we have irrelevant information used in our sales forecast, then all the rest of our budgets will also have irrelevant information, which will affect the decision making of the organization. Okay. So aside from the sales forecast, so we will also forecast other variables. So like, okay, sales, so cost also, cash, related items, or others that are critical in budgeting. So many of the same factors considered in sales forecasting will also apply to cost forecasting. Okay, so here historical amounts can be of real value. Here, of course, in terms of cost forecasting, so we are talking about cost. So basically, aside from estimated values, we can also refer to the values. For example, cost or purchase cost of the materials, our labor cost based on the past. Okay, but this will be just the basis, and it is not certain that this will also be the values that will be incurred in the actual performance. Okay. So managers can adjust also the past figures based on their knowledge of the coming events. Okay, so that's why this is just, or the historical data will be just a basis. Okay, overhead are also broken into its component costs. So this can be predicted using the past data as well and the relevant information for the figures or values that will be reflected in the budget. Okay, so those are the different factors and considerations for budgeting and its role in planning and control.